Hello, everyone, and welcome back to the Impactful Capitalists. My name is Max Getuba, founder and host of the Impactful Capitalists, where we make an impact through action. Today, we are going through two impactful community tools, one that helps you discover your financial personality type, and the next one that helps you craft a personalized investment strategy with artificial intelligence. We are very excited for you to join us today and we hope you enjoyed the video. So sit back, relax, and enjoy.
Can't wait. I'm really excited to dive into this topic and learn more.
Trust me, I know the feeling, Nia. This test is based on The Psychology of Money by Morgan Housel, which is a great book on personal finance that makes the point that how you think, react, and make choices with money is more important than anything else. In this quiz, we'll answer real world money scenarios and break down my personal financial mindset, and of course, in the process, teach you how to use the quiz and make the best of it. Make sure you watch until the end because we have a special surprise for all of you. Why don't you tell everybody what the confidentiality notice says, Nia?
Thank you for taking part in this survey. We value your insights and want to assure you that your privacy and confidentiality are our top priorities. Anonymity guaranteed. Your responses will be fully anonymized, meaning no personally identifiable information will be linked to your answers unless you give explicit permission.
Why don't you read the first question?
All right, here goes. I have a quick question for you. Imagine this scenario. You unexpectedly receive a bonus of 5,000 at work. What's the first thing you think you should do with that extra money? Invest it into a diversified portfolio and let it grow over time. Save half of it in an emergency fund and use the other half to invest in something else. Use it for a high risk venture like investing in cryptocurrency or individual stocks. Spend it all on a luxury item or upgrade your lifestyle.
You know what? I think the best answer for me would be save and invest half, but if I'm being totally honest, I'd probably save a third, invest a third, and spend a third. And I know it may sound surprising to many people, but I mean, I think if you get a bonus, you have to spend some of it. Otherwise, it wouldn't feel like a bonus. I mean, you got the bonus, why wouldn't you spend some of it? And the thing is, I have a personal philosophy on life that life is not an optimization game. I think if you spend some of that money having a good time with your family, with your friends, I think that you can create moments that can also last a lifetime. And that's an investment in and of itself, rather than investing it purely in the stock market or bonds or real estate or whatever else and feeling as if you missed out. You know, it's a bonus. It's a bonus. It's a sign to live life just a little bit, just a little bit. But be responsible because that's the only way you're going to do this in a sustainable fashion that lasts a long time.
That's a fascinating thought. That's surprisingly nuanced and it makes a lot of sense when you think about it.
Thanks, we try. So let's see what that makes me.
You're not one to miss a beat. That beat choice shows you're all about stability and growth. It's like you're dancing a delicate financial waltz, protecting yourself from the market's unpredictable tango while seizing every chance to grow your wealth. You know how to balance risk and reward, keeping things steady but not stagnant. It's a strategic mindset that lets you sleep well at night, knowing you've got a solid plan for both today's challenges and tomorrow's gains.
Interesting.
Did that surprise you, or was it what you expected?
Yeah, I think it is.
Fantastic. Let's keep moving forward. Onward to the next question. Imagine this scenario. The stock market takes a nosedive, and all of a sudden your investments are worth less. What would you do? You have four options. Keep your cool and hold on to your investments, waiting for the market to rebound. Buy more stocks now that they're cheaper. Panic and sell off everything to avoid losing any more money. Try your luck at timing the market and switch to safer assets, hoping the storm passes quickly.
I'd probably buy more while prices are low, especially if nothing's changed about the business's fundamentals and it's just the market being the market. Warren Buffett has this great idea that you should be greedy when other people are fearful and fearful when other people are greedy. And I think it's a pretty good idea to listen to the greatest investor of all time.
Contrarian is your middle name, my friend. You're all about seeing the market downturns as opportunities. volatility. It's just the cost of doing business for those long term gains.
Yeah, I think it makes sense.
All right, on to the next question. How are you with borrowing money for investments and lifestyle upgrades? You have four options. Option A, don't like debt, only take it for essentials. Option B, comfortable borrowing for smart investments like businesses or real estate, but not fancy stuff. Option into leveraging money to boost your returns can make you rich quicker if you know what you're doing. Option okay, borrowing for a lavish lifestyle because luxury is worth it.
I think option B. I think if an income generating opportunity presents itself, it's perfectly fine to borrow. However, you never want to borrow so much that a failure could wipe you out. Now that's when people start to fail. Smart and rich people, as Warren Buffett has said. So always make sure you never risk the entire house. Always survive. In order to win, you must first survive.
That's intriguing. Let's figure out your financial personality. Looks like your approach to money is quite measured and strategic. You're open to taking calculated risks when they offer long term benefits, but you're cautious about overextending yourself. You see debt as a tool, but you use it responsibly. It seems like you have a plan for your financial future and you're thoughtful about your expenses. Let's move on to the last question. Imagine this dilemma. Your friends are constantly upgrading their cars, houses, and lifestyles. What's your gut telling you? Then you could continue with the options. Would you stick to your plan and build wealth without making waves? Upgrade when you truly can afford it. Take a calculated risk and invest to level up, or go all in, upgrading your own lifestyle first and worry about the finances later?
I think option B, I might upgrade if the finances allow it, but I will never let FOMO control me. The fear of missing out has never been a factor. For me, I like to beat to my own drum. Is it like sing to my own drum, beat to my own drum? I like to go to my own drum. I don't know the expression, but I like to move to the beat of my own drum. That is expression. I like to move to the beat of my own drum. So the fear of missing out has never really been a factor. I like to be a leader of my own life and feel like I'm in control of it. So that's never been a factor, and I like it like that.
Wise words. And now, let's delve deeper into your thoughts and see what they reveal about you, sir. You've got a balanced, practical attitude toward money. You don't let the pressure to constantly upgrade your lifestyle control your decisions. You're thoughtful about when to make big purchases, ensuring your finances are in order first. It sounds like you're quite disciplined.
What's important to note, however, is that no strategy is right for everyone. Context matters in personal finance. You might have different risk tolerances or goals or experiences in your life, and you might want to live your life in a different way. That's perfectly fine. This tool only helps you discover certain financial personality traits about yourself, and that might help you become more aware when you make these financial decisions in the future.
All right, we've got some important information now. Let's use it to create a personalized investment plan that fits your personality like a glove.
You said it. Let's get back to link.tree slash the impactful capitalists, then impactful community tools, and click on unlock your personalized investment strategy in minutes with the Investment Compass Kenya edition.
Whoa, you're in for a treat. This investment tool is about to revolutionize the way you approach personal finance in Kenya. It's like having a personal financial advisor in your pocket. Click on the option to discover the best investment strategy for building your financial future.
Sure thing. What's so cool about this one is that it tailors your investment strategy to your risk tolerance, investment goals, timeline, and financial situation.
Hey, that's interesting. So, the first step is to do a financial stability check. I wonder what that involves. Let's see. Oh, it starts off by asking about your income sources, your emergency fund, and whether you have any high interest debt like credit cards. Pretty cool questions, huh? Type your answers in the chat so we can see where this goes next.
Okay, let me put those in.
Interesting. They're diving into risk tolerance now. They want to know how we'd handle it if our investment value took a nosedive, if we like a more conservative or a high risk approach to growth, and if we're comfortable waiting it out for long term benefits rather than looking for quick gains.
No problem, let me put those in too.
Well, look at that. They're asking about your investment goals. Do you prioritize short term financial security, long term growth, or perhaps generating passive income? They're also asking if you're saving for a specific goal. This is all about understanding what's most important to you and how it influences your investment decisions.
All right, let me choose.
This question's about your time horizon, how long you're ready to let your money work before needing to access it. They're probably thinking about short, medium, or long term investments and how that might influence your decisions.
Sure thing, putting that in now. So, apparently, I am a balanced risk, long term growth, moderate stability investor, which I think is quite interesting but also quite accurate, which makes me quite impressed with this tool. And the tool has also given me some recommendations on asset classes to research and even percentages I can see to allocate to each. And it's given me some pretty good reasons on why all these strategies fit me. So obviously this isn't an investment advisor, but it does give you a great starting point to start looking for options to plan out your own financial future based on factors that are personal to yourself, that no one knows better than yourself. And I think that's a pretty powerful thing. And yeah, that's the age we live in. We can use artificial intelligence, we can use so many different tools to educate ourselves and grow. And I think that's a beautiful thing. And that's what the Impactful Capitalist is all about: self education, self empowerment, and self growth as well. So I hope this tool helps you discover more about your own personal finance. And I hope that you can actually build on it, because I can see there are additional tools that you can use to learn more about your personal finance. So I hope you can use them, you can play with them, you can share them with your family, and really discover more about yourself and plan out your future to be as successful as possible.
Wowza, a personal financial educator in your pocket? That's mind blowing. It's like having a money expert at your beck and call, anytime, anywhere. It's got my full attention. I'm really curious and keen to explore what this could mean for managing our finances.
Couldn't agree more, Nia. So if you'd like additional information about the different investment options in the Kenyan market, make sure that you click the link in our description, subscribe on our Substack, and become an official member of our community so that you can receive a free ebook that will give you a comprehensive yet digestible view of the different options at your disposal. I hope you enjoyed the video, and if you did, don't forget to like, share, and subscribe. And as always, all the best and keep it impactful.